You're welcome to Risto Institute. My name is Kiden Sarah and I will be taking you through cost accounting. So today we are going to look at our topic called the cost sheet statement. So the cost sheet statement, it's the document or a sheet containing a cost of product or a group of product. So we see that the industry uses is to determine the cost of the products manufactured and fixable of selling price after adding the profit margin. So in a cost sheet, we see that it's a report that lists all the costs connected with production or manufacturing processes. So this cost sheet, it's usually used to calculate the profit margins on a product or activity and set prices for similar products in the future. So it can also be used to support a variety of cost-cutting methods. So why do you think that we need to prepare this cost sheet? One, it determines the per unit cost of a product or a service, and also it sets the right price by adding a desired profit margin, and then also it gains insight into structure for better decision making, so you can be able to make better decisions when you understand this cost sheet. So let's look at the importance of cost sheet for the management. We see that it determines the total and per unit cost, and then also it compares the current versus the past cost data, and then also it helps to identify and correct cost escalation, and then also it enables control of production cost, and it is also used in decision making, like make or versus buy. So we also see that it helps in quoting prices for new or existing products. It helps to quote the prices for the new, or it can be for existing product. So the importance of this cost sheet for the customers, we see that it leads to share with customers to justify it is already shared with the customers to justify the pricing, and then also it supports the price increase due to cost escalation, and then also we see that it explains components like the raw materials, the wages, and then freights, and then also it helps in transparent negotiation. So let's look at what are the components of this cost sheet. One, we have the prime cost. We have the prime cost. So when we talk about prime cost, we see that it is the complete direct cost of the manufacturing process. We have the direct material costs, we have the direct labor cost, and then direct expenses. So these are all, when you add up these ones, you come up with the prime cost. So the method of calculating, of getting this prime cost, it means that you add the direct material cost plus the wages, direct expenses. So we have what we call factory. Element 2, we have factory cost, or what we call works cost. So this factory cost is the factory cost, or the work cost consists of the prime cost plus the factory overhead. So you get the prime cost, then you add it to the factory overheads to be able to come up with the factory cost. For example, the cost of all types of indirect materials, indirect wages, and then also indirect expenses. Those are the overheads. So for example, the formula for the factory cost is equals to the factory overheads. The factory overheads, we say they include the indirect materials, the indirect wages, and then also indirect expenses, plus the opening work in progress minus the closing work in progress to get the works cost. So we have what we call the cost of production. The cost of production is the cost of it consists of factory cost plus all the types of other direct and indirect costs. For example, the office or the administration cost. This administration overheads, or it can be called administration overhead. So this cost of production is calculated by getting the factory cost plus the administration overheads. And then we have what we call cost of goods sold. Cost of goods sold, you see that this if the cost of finished goods is included in the cost of production, then we can arrive at the cost of goods sold in the following manner. So we can calculate the cost of goods sold by getting the cost of production plus the opening stock of finished goods minus the closing stock of the finished goods. Again, that is how we calculate, that is how we come up with the cost of goods sold. And then we have what we call cost of sales. Cost of sales is when the selling and distribution overheads or expenses are added to the cost of goods sold. We come up with the cost of sales. So to get cost of sales, it means that we get the cost of goods sold plus selling and distribution overhead. Remember, the cost of goods sold is different from cost of sales. So let's look at what is profit. We see that the profit, the last component, we have the profit. The profit, the last item of every cost sheet is the profit. So we need to come up with the profit, which can be termed as the differences of selling price and cost of sales in the case of existing item. But for the new item, the manufacturer has to keep minimal desired level of profit margin and decide about the selling price accordingly. So this cost sheet also help in setting up maximum retail price. So the profit is got by selling price minus cost of goods sold. So you get the selling price minus the cost of goods sold to be able to come up with the profit. So those are the components of a cost shell. So this cost cell, when you're working on it, it has a format. So let's get to understand the format of coming up with the profit when we are using the cost sheet. The cost sheet is as follows. Its format is as follows. We see that you have to put the company's name. You see the name of the company and then the date. So let's look at one, how to derive up with this, and then we have the particulars, and then we also have the total cost and then cost per unit. So we say that when we are provided with direct materials consumed, or it can be raw materials and consumables, that it can be open. So under them we have the opening stock of raw materials. Opening stock of to come up with the direct materials consumed, you get the opening stock of raw materials, you less the closing stock of raw materials, then to be able to get the net material consumed. So two, we have what we call direct labor. So direct labor, it includes the wages too. What are these direct labor? When we talk about direct labor costs, we mean the wages to workers, incentive to workers. These are direct labor cost. So when we talk about direct expenses, they include, we have the power and fuel, we have freight and cartage for incoming materials, we have salary to production supervisors, we have the supervisors, the junior engineers, and so many others. So the salary that is given to people, that are the employees that are directly involved in the production production process. That's it. And then we also have the uploading charges of incoming materials, and then we also have depreciation of machinery, and then we also have depreciation of factory building if it is owned. So then to come up with the prime cost, we say that to come up with the prime cost, you get the total of direct materials consumed, or it can be called raw materials and consumables, plus the direct labor cost plus the direct expenses. That's why they have put to get the prime cost, you get 1 plus 2 plus 3. So to get the prime cost. So then we add factory. After getting the prime cost, then obviously we have to add the factory or works overheads. So this factory or works overheads, the examples we have the repair and maintenance of machinery, we have repair and maintenance of factory building, we have the cost of machine tools, we have the salary to production manager, raw material store in charge, and other production and store staff. And then we also have the labor welfare expenses, and then also we have the factory lighting, and then we also have other factory overheads like housekeeping, salary to security guard, factory stationery, and many others. Then you'll be able to come up with the factory, to come up with the total of the factory factory works overhead. Then after we get the gross factory works overhead. To get the gross factory works overhead, you add the prime cost plus the factory works to get the gross factory or works cost, the gross work cost. So then after you add now the opening work in progress. You add the opening work in progress. Then after adding the opening work in progress, now you less the closing work in progress. After lessing the closing work in progress, it means that you're going to come up with the factory work cost with the net factory work cost, which you will get the what? To get it, it means that the total that you get after adding this opening, you add this opening work in progress to gross factory, then you less closing work in progress to come up with the factory or work cost. So then after we add the administration overheads. Under administration overheads, the examples we have salary to office staff, we have incentive to other office staff, we have stationery and printing expenses, we have office lighting expenses, and then we have telephone expenses, we have remuneration to directors, and then we have staff welfare expenses, we have audit expenses, we have legal and professional charges to come up with the cost of production. So the cost of production, to come up with the cost of production, it means that you add the factory overheads plus the administration overheads. You get the factory cost, you add the factory costs plus administrative overheads to come up with the cost of production. And then after getting the cost of production, then you add the opening stock of finished goods, then you less the closing stock of finished goods to come up with the cost of goods sold, to come up with the cost of goods sold. Then after coming up with the cost of goods sold, then you add the selling and distribution overheads. The selling and distribution overheads, the examples are the salary to sales team, commission on sales, advertisement expenses, traveling and hotel stay, expenses of staff, warehouse rent and depreciation, cost of sales, then you come up with the cost of sales. So to come up with the cost of sales, it means you will add the cost of goods sold plus the selling and distribution overheads to come up with the cost of sales. So after coming up with the cost of sales, then the cost of sales, then we have then you get you put the profits. So to get this profit is always provided. So to get the sales or to get the selling price, it means that you will add the cost of sales plus the profit to come up with the sales or the selling price. So that is the cost sheet format. That is the cost sheet format. So they have given us an example. So we are going to use this example in coming up with the cost sheet. We have been given that purchases of store and warehouse for raw materials and direct raw materials and direct consumables, which is 25,000 shillings. And then opening stock of raw materials and direct consumables, it was 4,000. And then clothing stock of raw materials and direct consumables was 2,000. And direct wages paid to workers was 6,000. And then other direct expenses was 2,000. And factory expenses overhead was 2,500. And office and administration overhead is assumed to be 30% of factory cost in absence of extra data. And then also we have opening stock for finished goods, which was 3,000, closing stock for finished goods, which was 4,000, and selling and distribution expenses or overheads of 5,000, and profit margin on total on cost is 30%. So let's come up with the cost sheet and find out the selling price or the sales. So we have to generate the particulars and then the amount. So I've already entered, so we are going to be following. So we start up with identifying our raw and direct consumables and direct consumables material. So they told us that in the formula to get the total this, you have to put the opening stock for raw materials. So in our question, we have the opening stock. We have the opening stock of raw materials consumable, which was 4,000. Then we go and do we have purchases? They said purchases of store and warehouse for raw materials and direct consumables. So you add the purchases. You add the purchases. You add the purchases. So the purchases was 25,000. It was 25,000. Then what we do, we less the clothing stock. It is given to us. We have the clothing stock of raw materials and direct consumables, which was 2,000, which was 2,000. So if you're lessing, you put the bracket sign to show that you're lessing, minus 2,000. When you add 25,000 plus 4,000, which is 29, minus the 2,000, you get 27. So the net raw materials and direct consumables materials consumed, they are 27,000. They are 27,000. They are 27,000. So we add the wages paid to workers. So we come and check. Do we have the wages paid to workers? They say purchase, we have worked on this. Then we have direct wages paid to workers. So we are adding, these are direct labor. This is direct labor. So we add in our working, remember in our forward we say that we add direct labor. So direct labor, we have direct wages, these are under direct labor. So which was the price? The price was 6,000. So you add 6,000. You add 6,000. Remember, they said that we also add the direct expenses. So we come here and look, do we have any direct expenses? They're saying other direct expenses, which was 2,000. So you come and add the direct expenses, which was 2,000, which is 2,000. So to get the prime cost, remember we want to get the prime cost. To get the prime cost, we add the direct raw materials consumable plus the direct wage labor plus direct expenses, which we get 27 plus 6,000 plus the 2,000 plus 2,000, which we get 35,000 as our prime cost. So after getting the prime cost, remember they told us that we now add the factory expenses overheads. So do we have any factory overheads? So the factory expenses, we come back to our question and we look at factory expenses or overhead, which was 2,500. So we add 2,000. We add 2,500. 2,500. We add 2,500. Then to get the factory overheads, it means that when we add this one, 35 plus 2,500, we shall get 37 as our factory or cost or work cost as 37,500. At 37,500. Then we add the office and administrative overheads. So we come to our question. Do we have office? We have office and administrative overheads. They have not given us the figure, but they are telling us that is assumed to be 30% of factory cost in the absence of the exact data. So what we are going to do, we are going to calculate the figure. They're telling us 30%. So what you're going to get, you're going to get the 30%. What is the 30%? The 30% of our factory cost. The 30% of our factory cost, it will give us 11,250. 11,250. So to come up with the cost of production, you will add the factory cost plus the office and administrative overhead, which we shall get, we shall say 11,250 plus 37,500. We shall get 48,750. 48,750. Then we add the opening stock. Do we have the opening stock? Yes, we have the opening stock of finished goods, which was 3,000. So we add 3,000. We add 3,000. Then we less the clothing stock of the finished good. We come back to our question and check what was our clothing stock for finished goods, which was 4,000. So minus 4,000, we open bracket, we put 4,000. Remember, any subtraction in accounting, you have to put in bracket. And then to be able to come up with the cost of goods sold, so we shall say 48,750 plus 3,000 minus the 4,000. Minus 4,000. We shall get 47,750. So then we shall add the selling and distribution expense. Do we have it? So we come and check. We have selling and distribution expense overhead, which was 4,000, which was 5,000, sorry, which was 5,000. So you add and you say plus 5,000 to come up with the cost of sales, plus 5,000 to come up with the cost of sales. So you say 47,750 plus 5,000 which will give you 52,750. 52,750. After getting the cost of sales, we want now to add the profit. So we come and check in our question what was the profit. They're saying profit margin on total on cost is 30%. So they're telling us that this 30% we are going to get it, to get the profit margin, we get it from the total of cost of total of goods cost 30%. So what we do, we say 30% of the total cost, of which is 30% of 52,750, which will give us 15,000. Which will give us 15,825. So to get the sales or the per unit selling price, we add the cost of sales. We add the cost of sales plus the profit. The profit is 15,825 plus the cost of sales, which is plus 52,750. So our sales, we shall get the sales of 68,575. So that is the per unit selling price. So that we have come up, that is how we calculate the cost sheet. So we have come up to an end. So this is the sales. This is our sales. Our sales, we get 68,575. So thank you. I've come to an end of this lesson. Have a great day.